So this is why we are starting today itself with the very first session of this demo session, Powerpack revision batch. And remember, for a few minutes, we are going to be live on YouTube as well, so that the candidates, if they want to enroll it, they can enroll it, and we are going to complete this session. Remember, when you are watching this AFM session, do use your calculator for your calculations, and yes, use notepad and pen for solutions. Okay, because in this I have covered numericals as well as theory part. Chaliye. So welcome to all YouTube candidates. So this is our JAIIB CAIIB English medium. You can subscribe to our channel, and as well as you can get all your notifications by liking that subscription bell. Okay, so do subscribe it, because in this channel only we are going to conduct the mini marathon, A and B revisions, C and D revisions, PYQs, numerical sessions. So this is your one of the important channel. Chaliye. So without any wasting time, let's start this session. So as you know, under the module D, we have these many topics, correct? Starting from income tax, GST, cost and management, accounting, costing methods, standard costing, marginal costing, and last, budgets and budgetary control. So today we are going to complete all these many topics all together. So let's start with the very first topic. But before that, let's solve few questions. Now, this question is for you all. Both. Not totally MCQs, but few MCQs you are going to see, as well as the concepts. So, let's start with the very first question. Under the Income Tax Act 1961, which of the following statement is correct? Tell me. You have 4 options. You need to tell me which one is the correct option. Yes. If you evaluate the options, first, pen is 12-digit numerical number. This is wrong. Hana, we have only 10 digits. 10 digits, and that too alphanumeric. Then, residents are taxed only on income earned in India. That is wrong. Even outside India, income is also taxable. Then, next is, their finance budget is usually presented on 1st February each year. This is true statement. Linking PAN to Aadhaar is optional for individuals. No, this is not then optional. So the correct answer is answered C. Now, next question. According to the ability to pay principle, who is liable to pay income tax in India? Only salaried individuals, only residents with business income, or C, those who earn income based on their capacity to pay, or D, only corporate entities? Yes, that is mandatory. So, tell me about this particular question. YouTube candidates, tell me the answer. So the correct answer is those who earn income based on their capacity to pay. Correct? That is why we use here higher the income, higher you need to pay the income tax. So with this, let's start today's session. So income tax is governed by the Act 1961 and Rules 1962. These are the 2 things that you need to remember under Income Tax Act. And we follow the ability to pay principle. If you earn higher, you need to pay taxes even according to it. As per the taxes, as per the income you need to pay. So that is what ability to pay principle. Then resident income, all income taxable. Then for the non-residents, only income accrued and arise in India. Only Indian income is taxable when they are earning. Then finance budget 1st February every year. Now remember, pen is issued by Income Tax Department. Remember this. We have 10-digit alphanumeric number. This is 10-digit alphanumeric. Take it, this which is valid across country, and there is a requirement to link pen with the Aadhaar so that you can wide out all your fraudulent activities. So this is the basic introduction of your income tax. Now, next is classification of income tax payers. Income tax payers means those who earn income. Those who earn income, they need to pay tax, and they are known as payers. When you pay the tax, you are paying something. So that is income tax payers. We have 7 types of different income tax payers. Number 1, individuals. Individuals like you and me. We all are individuals. Even unsound mind person like individuals. Okay? Mr. A, this is what individual means. Then HUF, Hindu undivided family. This includes Jain and Sikh. If you are born in this Hindu family, you can automatically make this HUF. There is no requirement to make a contract. So the correct answer for this HUF is what? This includes the Jain and Sikh, and there is no requirement to make a contract. Okay, then next is company. Company includes your both the companies. That is your domestic, like Reliance, or even the foreign companies like Amazon, Apple company, Tesla company. Then firm and LLB, this is actually prepared by the professionals. Professionals like doctor, lawyers, advocates, CAs. So they prepare the LLPs and firm. Then association of person. Association of person means there can be individual plus firm plus company. When different type of persons are coming together, that is AOP. But body of individual means when you have only and only individuals in your group. That is what body of individual. Then local authority, that can be a municipalities plus local panchayats. And apart from this, if you find any other type of a taxpayer which is not classified in above heads, then you can use this artificial judicial person, AJP. Remember, this is your income tax payers. Now coming to the next, chaliye solve this question. Income earned by professionals like doctors running their own clinic, freelance architects, life insurance agents, or tuition teachers. Their income is taxable under which head? Just now you have seen about different types of taxpayer, Hana, but if they are earning the income, so in which particular head you are going to classify it? YouTube candidates, please give me the answer. Please don't just sit and watch. Now it's very crucial time. We need to work on these things. Okay? So try to give me the answers. Try to interact with me. Now this is not the time when you are reading for the first time. Yes. So when you are earning, you can see from the professionals or insurance agents, then you are going to use profits and gains of business or profession. Basically, they are doing the business. Hana? So they are going to earn it under the business or profession. So the correct answer is answer D. Then income earned from the sale of mutual funds, shares, house property, agricultural land, or money received by a shareholder on company liquidation is taxable under which head? Other sources, salary, capital gains, profit and loss from business or profession. Yes, so the correct answer is capital gains. Remember, this is not the business. Whether you sell the mutual funds, shares, house property, that is not your business. Hana, sometimes we sell all these things. So the correct answer is capital gains. Remember this, these are the two different tax sets. Basically, we have 5 tax sets. Starts with the income from salary. In this salary plus pension, we are going to record. Okay, simultaneously we are going to record the standard deviation. That standard deduction. And next is your income from house property. When you rent your house, so whatever the rental income you are earning, you are going to use income from house property. Then any profits or gains you are earning because of your business, because of professional things, you are going to use this, any profits and any gains. Then next is income from capital gains. So by the sale of all your shares, mutual funds, ticket, your house, if you sell it, or any land, then that is what income from capital gains. And the last is like FD interest, saving interest, or any winnings or like dividends. These are going to be part of income from other sources. Remember this point, okay? You have 2 different classifications. One is as per the taxpayers who are going to pay the tax. But on which things they are going to pay the tax? Only on these 5 different things. But sometimes they are getting the deductions. because of their investments, because of their expenditures. So these things are classified under these sections. So the first section is your ATC. How we remember this section? Combine, because we are combining different investments like LIC, Sukanya Samriddhi, PF amount, ELSS amounts. All these are going to be a part of this ATC. Then next is your ATD, health insurance premium. And how we remember this? ATD, D means doctor. Then next is ATE. E means whatever the loan you have taken for the higher education and whatever the interest you are paying. So you can get the deduction under that. So under which section? E means education. Hana? E means education. Then next is your G. G means grant. Whatever grant, like donation you have given to the funds, or charitable institutions or to the government, you are going to receive this as a deduction. Then next is section QQB. B means books. B means books. So whatever the royalty income you are receiving on the books, except which type of a books? Textbooks. Remember, textbooks are never going to be covered under this royalty income. No NCERT book, no ICSC books. Okay, only the authorized books, author given books. Then next is ATRRB, royalty on patents. Royalty on patents. Then ATTTA. ATTTA means whatever saving account interest you are receiving, you are going to get the deposit. Then B. I told you in Hindi we call senior citizen as Bade Buzurg. Hana, I told you about this thing. Bade Buzurg we call senior citizen. So ATTTB, Bade Buzurg. So if any senior citizen receives the interest, they are going to receive the deduction under ATTTB. And the last is about you. About you means if you are facing any disability, you are going to receive the deductions under ATU. So these are the deductions given for your income tax. Okay? These are the investments or these type of deductions. If you are doing, you are going to receive the deduction. Chaliye, solve this and tell me the answer. Tell me the answer fast, everyone. You need to identify the incorrect statement. Income tax is a direct statement, direct tax, true. Income tax rate is different from domestic and foreign companies, absolutely true. The format for income tax return is different for different classes of SECs, absolutely true. Because we have from ITR 1 to ITR 7. Hana, these many forms we have for each and every kind of SECs. So if you see the income tax rate is same for individual and the company, absolutely false. So the correct answer is answer B. Now next, deduction in respect of royalty income. Tell me, under which section? Under which section? Read it carefully. For which section we are getting the deduction? We are getting the deduction for authors of certain books. Hana, not for the textbooks. So that is QQB. QQB is your correct answer. QQB. This is not G means grant. Grant, donation. Okay, this ATCC is we are not covering. Then ATRRB. This is for patent. QQB is for your books. Remember, double O, double Q. Okay, double O, double Q. So with this, you can retain it. That QQB is for the books. Chaliye. Now, coming to the next. That is about income not going to be included in your total income. Exempt income, they are never going to be a part of your total income. And now in this, you need to remember the examples. like agricultural income, any partner who receives the total income from the firm, or any concession or assistance you are receiving by an individual, or when you are receiving any gratuity or any VRS amount you are receiving, correct, or any approved superannuation fund you are receiving, or when you are receiving any grants to meet the cost of education. So these things are never going to be a part of your total income. These things are going to be exempt, never going to be included in total income. Next, TDS. Remember, I have told you the example where you all are working in bank. Hana, bank pays you the salary, but small portion before paying you the salary, bank deposits to the government, and we call this as a TDS. We call this as a TDS. So here, this is the advanced tax. Hana, if any person or a company who pays the amount above the threshold limit, they need to deduct the TDS. And here we have two parties. Deductor is known as your bank, and deductee is employee. And only deductor can deduct the TDS if they hold TAN. TAN is what? Tax deduction account number. If they are not holding the TAN, they cannot deduct the TDS amount. So this is about the TDS. Now, next is about TCS, tax collected at source. So now in this we have the seller, we have the buyer. Okay. If the seller supplies the specific goods, what are those type of specific goods? Like tendo leaves, liquor for human consumption, buyer purchasing goods for more than 50 lakhs. And if they are doing these type of special good transactions, they need to deduct, they need to collect the TCS from the buyer. Okay, TCS from the buyer. But if there is public sector companies, central or state government, or embassies, if these are the parties who are involved in the transactions of these specific goods, then you are not required to collect the TCS. Exempt. So this is your PCE. Okay, PCE. Like we have PCM in our 11th and 12th, na? Physics, chemistry, maths. So from that we have derived it as a PCE. Correct? Now, next thing is about the filing procedure. So here the seller needs to file TCS return to this government. Under which form? Under form 27 EQ. And what is the time limit? Quarterly TCS return. Quarterly TCS return. And simultaneously, seller needs to submit the proof of submitting this TCS return to the government. And what is the proof this seller needs to submit to the buyer? That is this TCS certificate under 27D format. But if seller does not pay to the government this quarterly return, then he needs to pay 1% per month as an interest rate. Remember everyone, what is the interest rate? 1% per month. Okay, for non-payment of any amount to the government or before the due date. So that is the interest rate. But if as a seller you are non-filing income tax return for past 2 years, then you need to pay higher TCS rate. What is the rate you need to pay? Higher TCS rate. For how many years? For 2 years. So this is about the TCS. Then we have the new filing for the individuals under section 115 BAC, where individual gets the option under this existing and new. Whereas for the companies, especially for the domestic companies, we have section 115 BAA. So if domestic company wants to opt for 22% tax rate, they can opt it. Then they need to adjust for the surcharge and cess as per their limits. But remember, if this domestic company opts for this 115 BAA, then they cannot withdraw in the future. That is the limit they need to face. Correct? They need to face. So this is about what? This is about new filing 115 and BAC and 115 BAA. Then next is mandatory. Mandatory filing of income tax return. Who are required to file the mandatory filing? Number 1, if your income is more than the threshold limit, like 2.5 lakhs above, 3 lakhs above, or 5 lakh above, or 4 lakhs above in new concession rate, so then you need to submit income tax return compulsorily. Then next is if you want to claim a refund. Refund is such a situation where you have deposited TDS more than your tax amount. At this point of time, you're going to receive the refund. Then carry forward a loss, you need to submit return. Then if you are an Indian resident and you hold any property outside India, then that is what then that is also situation when you need to compulsorily file income tax return. Then last is companies or firms where companies earn profit or loss. Compulsorily you need to file this income tax return. Okay, so these are the mandatory conditions. Now, the last thing is about the deferred tax. Remember, deferred tax is applicable only on the companies, not on individuals. So, because of the different tax laws, because of the different acts given by the Companies Act 2013, when the laws are different, their answers are also different. Their situations are also going to be different. So, if there is any difference because of the law, they might see a deferred tax. Okay, if the differences are there in their laws, so that will raise to deferred tax. So the first is their permanent difference. So because of the interest penalties or because of violation of law, when you pay any amount, so that is a permanent difference. But because of your depreciation, you are going to get first deferred tax asset or second deferred tax liabilities. So this is about the deferred tax. Chaliye. Now coming to the next. Everyone solve this question. Okay, let's read about this. Correct, bilkul correct. So, under the provisions of Income Tax Act, which of the following individuals is exempt from mandatory e-filing of the income tax return? So, basically, if we talk about the super senior citizens, if their age is more than 80 years, then they can file the paper returns. But the condition is only they need to earn salary or the pension or some kind of interest. But if they are earning any business or profession gains, if they are earning this, then they need to compulsorily file e-filing. Correct? So this is the limit that you are going to see. So under this, if a salaried individual is less than 60 years, wrong. Age is 75 years, no. This is applicable only when the age is above 80 years. So the correct answer is answer C. Chaliye, next question. When a shareholder receives money or other assets from a company upon its liquidation, such income is taxable under which head? You have 4 options, everyone. 4 options. Yeah. So when we talk about the shareholder, whatever the money they are receiving at the time of liquidation, so that is not going to be a business. So that is again going to be a capital gain. That is what? That is your capital gain. That is not other sources. That is not at all going to be salary. So the correct answer is capital gains. So with this, we complete your income tax revision. Okay. Now coming to the next topic, that is your GST. Now tell me, GST is a direct tax or an indirect tax? GST is your direct tax or indirect tax? What do you think? Indirect or direct? YouTube candidates, please tell me. Yes, that is your indirect. This is your indirect tax. This is your indirect tax. So, GST actually introduced from 1st July 2017. But what indirect taxes we used to follow before this? We used to follow SAN VAT, VAT, service tax. And after compiling all these taxes, we framed one tax, that is GST. Okay? We compiled different taxes and we prepared one tax which actually applied from 1st July 2017. And what type of a tax is this? Destination based tax. Destination based tax. But few goods are also not covered under this GST. Then that is cap. Few goods which we're never going to include in this GST, that is cap. C means crude oil, P means petroleum products, A means alcoholic liquor for human consumption, and E means electricity. So these are the goods which are not at all covered under the GST. If you are dealing in this kind of goods and if you are doing the business, then there is no requirement of GST till now. Now the next thing is, there are 4 types of GST in India. The first is your SGST, CGST, IGST, and UGST. So these are the different types of taxes under GST we have. So in case of same state transaction, we need to charge SGST plus CGST, correct? But in case of different states, whenever you are crossing a state boundary, anytime if you cross the state boundary, if anytime means your goods, if they cross the state boundary, which is the tax we need to charge? That is IGST, integrated goods and service tax. And lastly, we have UGST, that is union territory goods and service tax. So in case when you have the same territory, then you need to charge UGST plus CGST. Within same union territory, you need to transfer the goods. But as soon as if you're crossing your states, any state boundary if you cross, IGST is the only tax you need to charge. Correct? Then next is your, how many states are covered under this UGST? That is union territory. That is, first is Andaman and Nicobar, Lakshadweep, Dadra, Nagar Haveli, and Daman, Diu, Ladakh, and Chandigarh. So these are the states covered under UGST. But remember, not everyone needs to get registered under this GST. If you are earning more than 10 lakhs, okay, in the states like MMNT, then only you need to pay what? GST. So tell me, what is the full form of MMNT? Tell me, what is the full form of MMNT? What is the full form of this MMNT? Everyone be ready, na? No, that time UGST plus CGST. Yes. MMNT means Manipur, Mizoram, Nagaland, and Tripura. That is the full form of MMNT. Manipur, Mizoram, Nagaland, and Tripura. Then, if you are falling under these states, that is Putsam, Puducherry, Uttarakhand, Telangana, Sikkim, Arunachal Pradesh, Meghalaya. Then your limit is going to be increased up to 20 lakhs. If you are selling about 20 lakhs, then only there is a requirement to get registration under GST. Then next is for the other states, you need to comply with the 20 lakhs. But if you are doing only intrastate transaction, or you can say same state transaction, okay, plus only you are dealing in goods, so your limit increases up to 40 lakhs. Then next is, who are liable to pay the GST? All businessmen and who are dealing in the goods and services. Next is RCM. RCM means when customer pays tax to the government. Okay, when the customer pays tax to the government, that is RCM. Then TDS. This TDS and TCS is as per your GST Act. So TDS only applicable when there is a government who buys with the vendor more than 250,000 goods, or if there is a e-commerce, okay, like Myntra, Flipkart, Amazon. If these type of companies are dealing in any goods and services, then they need to collect the TCS as per GST. So these are the liability they need to pay GST. Now next is GST return. So every registered person who got registration under these they need to pay this GST return. Then input service distributor monthly, TDS TCS as per these conditions monthly, non-residents for the period of their activity, and composite dealers. So these are the GST return persons. Then GST Council. GST Council, basically this is about the GST department. GST department. Okay, so GST Council works on the decision making. Next, makes recommendation on issues. So these are the actual duty of this GST Council. Chaliye. Next is about when there is a liability to pay GST arises. Earlier of the three conditions: receiving payment, issuance of invoice, or completion of supply. Then, when what are the returns you need to submit? That is GSTR1 or 3B. If your aggregate turnover is more than or equal to 1.5 crores, then you need to file GSTR1 and 3B monthly. But if your turnover is less than or equal to 1.5 crores, then GSTR1 quarterly base, GSTR3B monthly. But if you are not filing within this time limit, be ready to submit 18% per annum as your liability. This is the penalty you need to pay. 18% per annum. Everyone, I hope you have heard this. 18% per annum. Okay? Next, about the advantages. Remember the advantages, things are simpler. Okay? Easily you can file it. Easily now you can do the business. You have understood each and everything, transparent thing. But the important term is cascading. Cascading means now no tax on tax. So this is the very important term. Elimination of cascading effect. Now the things are eliminated because of this GST. Okay, so this is what elimination of cascading means. Tax on tax. Earlier, because of service tax, SENVAT, VAT, we used to charge tax on tax. But now all these things have been eliminated. Then next, issues and impacts of banks. So there are 4 issues and 4 impacts on the banks. First is about registration. Now each state branch need to take the separate registration. When they are taking a separate registration, they need to file separately the returns. Correct? Because of this, things became very complicated. Now, under the input tax credit, we are getting only dash percentage as a ITC. Tell me, what is the percentage? What is the percentage? What is the percentage? So ITC means what? Whenever suppliers are purchasing the inputs, and that time if they have paid any GST amount, Hana, and the same thing when they are selling output, and again they are getting the tax, or you can say the GST amount. So this input GST you receive as a deduction, as a subtraction. So how much input tax credit we are receiving? Only 50%. Remember this, only 50% on this capital goods. Then assessment and adjudication. Because of so many offices, things are never going to be settled in a one point. So that these are the different issues and impacts to banks. Now, next is issues related to revenue recognition. First is your account linked financial service. Account linked financial service, because of different addresses. You have KYC address, you have permanent address, temporary address, some any other residing address. So in which particular address, when you are communicating, then we are saying that this is things actually communicated to them. So this is the first difficulty in case of account linked financial service. Because of so many addresses we are collecting from the customers. So in which particular address, when we are communicating, we are going to say things have been actually communicated. So that is the first difficulty. Then next is non-account linked financial service. Non-account linked financial service means when you are transferring the services to the different state, Hana, but actually are working in your own state. So at which particular point we are going to say that things have been completed or you have completed a task. That is what a non-account linked financial service. Next is actionable claims. In this we talk about the bills of exchange. Bills of exchange. Remember in this bills of exchange, in this service tax, we never used to charge any tax on this bills of exchange. But under GST, we consider this as a supply. Okay, we consider this as a supply, but there is no proper rules and regulations. So again, the issue arises under this. Then GST on banking transaction, we have 18% on this banking transactions, and with this we complete your GST portion also. Now the thing is, this is our first demo batch, so I have completed 2 units. Okay, that too live. But from now, just give me a moment. So, till here I have completed 2 units from your module D, correct? So, all the paid candidates, don't go anywhere. We are continuing this session. But for the YouTube candidates, now we are winding up this session. And if you want to continue it, please join our revision batch. Now, how you can join our revision batch? Let me tell you. See, firstly, you need to visit to this Adda 24/7 because this is the paid batch. Okay, so this is the paid batch and available for the candidates who have actually purchased it. So if you want to complete your 4 modules of PPB and AFM in this limited time period, then you need to visit to Adda 24/7, all courses, JAIIB, CAIIB, JAIIB May 2025. And here is your Powerpack revision batch. In this revision batch, we are completing your AFM, PPB, and also we are going to complete your RBWM. So you need to click on the buy now. And after clicking on this, don't go and directly pay here. Okay? Because you need to pay 2391 amount. But if you use the coupon code, that is Y895, you can get the extra discount. And after using the same coupon code, that is Y895, now you need to pay only 2100 around something. So please, if you want to continue this session, you can join it through this particular batch. Okay, because today we are going to complete your module D. Chaliye. So thank you everyone who have joined from the this JAIIB CAIIB English medium channel. And one more information, tomorrow at 7 a.m. I'm going to conduct A and B mini marathon. Okay, so if you want to join that live session, so please join it because tomorrow I'm going to complete that A and B. And if I talk about the revision batch, so tomorrow I'm going to start with the A and B module. Today I'm completing the D module. Tomorrow and day after tomorrow, A and B module. And then Wednesday and Thursday, I'm going to complete the C module. Okay. evening. So you can watch afterwards also. So things are going to be in your YouTube channel only. You can watch recording during the daytime or whenever you are comfortable, you can watch it. Okay, chaliye. So thank you everyone who have joined from this JAIIB CAIIB English medium channel. You can subscribe to it because in this only we are going to bring so many revision sessions, mini marathons and special sessions, especially for our AFM. So thank you everyone. Take care and bye-bye.